Good day, guys. I hope everyone is doing well. So this is our session on order blocks, and it's going to be a very short one. It's quite easy to understand. So what is an order block? Okay, what is an order block? So an order block is the last, okay, it is the last bearish or bullish candle before a bullish displacement or a bearish displacement. Okay, it is the last bearish candle or bullish candle before a bullish displacement or a bearish displacement that breaks structure. Okay, so I'm going to explain what I mean by displacement to you. So this is a break of structure. All right. Good. Okay. All right. So when we say a bearish, okay, a bearish order block, okay, when we say a bearish order block, what we mean by a bearish order block, okay, is that it is the last candle, okay, the last bullish candle, okay, before a displacement that broke structure. And so the whole idea about order blocks, okay, the whole idea about order blocks is that price comes back to those order blocks to do what? To take orders that were left behind. So as smart money traders, we have the idea that the big institutions control the markets, right? So let's say in a downtrend, okay, let's say in a downtrend such as this one, price moves away from this level, break structure. There are orders that were left behind, okay? That price must come back to that level to take those orders and then do what? Continue its trend. That is the idea of order block. But that doesn't necessarily mean that anytime there is an order block, price will come back to it. Not true. Your order block does not attract price. But in case price comes back to it in the right sense, it should continue going down or upwards. Okay, so we have two types of order blocks. And we have the bearish order block and the bullish order block. So the bullish order block is for the bullish movement, and the bearish order block is for the bearish movements. Okay, so when we come to the bullish order block, what we mean by a bullish order block is that a bullish order block is the last bearish order block before a break of structure. Okay, so the last candles, let's say this is an uptrend, so you have a higher high, a higher low here. Okay, and you have a higher high and a higher low here. Okay, like the a higher high and a higher low right here. So we are in an uptrend. So we know that price is moving upwards. Okay, so how do we get into such types of markets? That is the whole idea of order blocks. Okay, so when the price comes to this level, and then it goes up, before breaking structure or after breaking structure, there is a specific candle right in this movement, okay? Right in this higher low to a higher high that caused the break of structure. So other blocks are always in the opposite direction of the trend. Okay, so when there is a bullish order block, it means it is a bearish candle. Okay, it is a bearish candle. So it's supposed to be a candle that genuinely is moving downward. So it's mostly found in this move, in the retracement leg. But then that doesn't mean you can't find it in the impulsive leg too. Okay. What you have to understand is that an order block is the last candle that was here, the last bearish candle that was here before this bullish move that broke structure. I hope you understand. The last bearish candle, when I say bearish, I mean the downward candle. Okay. The last downward candle that was right in this move. So it could be here or it could be here before this whole move to the upside. That broke structure. That is a bullish order block. So when we talk about a bearish order block, an order block that takes price down, okay? So that one too is the last bullish candle, okay? The last bullish candle before a displacement to break structure. When I say displacement means the fastness of price. The price displaced faster with energy, with momentum, okay? That broke structure. So the last bullish candle, sorry, the last bearish candle right here. Sorry, the bullish candle actually. The large bullish candle. That candle is supposed to move price upwards, right? The large bullish candle before price broke structure right there. The large bullish candle before price break structure right there. That is your order block. So you mark that order block, wait patiently for price to come back to it, and then you sell. Or you wait for that order block, you mark it, wait patiently for price to come back to it, and then you do what? You buy. So it's very, very easy because when you understand market structure, as I've explained in my other videos, then this is the only thing that you need. And you can actually start trading with order blocks with just the idea of market structure and order blocks. Okay, so this is just is you have decided that you found out that we are in an uptrend, right? So in an uptrend, this is exactly what you want. So price is more making series of what higher highs and higher lows. Okay, so you've established that there's an uptrend. Now, what are you looking for? You are looking for an order block. So when price moves up to break structure, so when price creates a new higher high right there, that last bearish candle, before that move right there, that broke structure, that move right there, that last candle is your order block. So genuinely, what you're waiting for is for price to come back to that level and do what? Continue the trend higher. That's what you're waiting for. And also in a downtrend, price making series of what? Lower lows and lower highs. Lower highs, lower low, lower highs. Okay. So when price makes this lower low and then comes back to this lower high, break structure right there. When it breaks structure right here, what you're looking for is the candle, okay, the last bearish candle before the break of the structure, the last bullish candle before the displacement, before the break of this specific structure to the downside. And when price comes back to it, it is expected to hold price and then move price what's lower. So when there is another block here, And always, there's another block in a specific move. Price reacting to it is different, but always there's another block in the specific move. So the only thing that you have to do is get your structure right. When you get your structure right and you determine that we are in a downtrend or we are in an uptrend, the only thing left for you to do is identify your order block. Now, as I've mentioned, an order block is the last bearish or bullish candle before a bullish or bearish displacement that breaks structure. So what makes an order block valid is that an order block breaks structure. When there is an order block in a move, it breaks structure. If it doesn't break structure, okay, let's say if this order block right there that I've marked right there, if it didn't break this structure right here, it is not an order block, and so we do not mark it and expect it to push price lower. We only expect it to push price lower when it does what? Break structure right there. That is when it is expected to push price lower. If an order block does not break structure, it is not a valid order block. You do not expect it to push price lower or higher. All right, so let's hop onto the chart and then have a few examples and then we close for the day. This is a very, very short video, and then I hope that you understand the idea of order blocks after I've shown you the charts. So let's go to silver. I've marked some order blocks there. So you go to daily. All right, good. So this is an example of what a bullish order block. So as you can see, we can identify our trend perfectly that we are in an uptrend because we have what? A low, high, a low, a high that breaks what structure. So now we have a higher high, we have a higher low, right? A higher high, higher low, a higher high, right? Good. So this is an example of what? An uptrend. This clearly is an example of an uptrend, right? So let's see what happens right here. Let's zoom in and then see what happens. So you can see clearly from here that this move right here, from this low to this upside, had an energetic move. That's what I call displacement. Okay. An energetic move that broke structure. So from these three candles, 1, 2, 3, 4, those four candles, you could see that all of them were bullish candles. So that shows for strong momentum of price willingness to move upwards. Keep it in mind, you need the displacement. You need price willingness to move upwards. And that's why it breaks structure. So the last bearish candle before the break of structure to the upside is the bullish what? Order block. So as you can see, I marked this last bearish candle right here before the displacement to break structure. And when price came back to it, what did it do? It moved price higher to create another break of structure. And so when you check this displacement right here, it's a price willingness to move upwards. So from this last bearish candle, okay, from this last bearish candle, you could see that 1, 2, 3, 4, 5. 5 bullish candles showing an energetic move that price wants to move upwards. It broke structure. The moment it breaks structure, you mark it as an order block. So in your mind, anytime that price returns back to it rightfully, when I say rightfully, it's not anytime that it's going to work before. Sometimes price might change character. Price might have a potential trend, price might change trend and doesn't come back to it early. And maybe when the time that it will come back to it, it will fail. Okay. So an order block it's not a surest way of actually trading at the market and always making money. Of course, we are here to teach you that you have to make money through this, but the whole idea is that there will always be losses. You can't avoid them, but at least you should make the right losses. Okay. So an order block that breaks structure is a valid order block, and you expect it to react or the market to react to it when it comes back to that level. So this last bearish candle right here, as a bullish order block, broke structure with displacement with an energetic move with momentum. And then price came back to it and did what? Move upwards. So the moment price came back to it, price did what? Move upwards. That is what we call an order block. So we have another few examples right here. Okay. So we have this right here. Okay. Have this right here. We have a high. This is also an uptrend, right? This is also an uptrend. So we have a high, a low, a higher high, a higher low, a higher high, okay, higher low, higher high, right? A higher low, and so on and so on. Okay. Now let's take example. Let's take a look at these two other blocks right here. You see this first order block that I've marked right here? It is not a valid order block. It is not a valid order block. Why? Because it hasn't broken structure, even though price reacted to it. Probably because when you go down to a lower time frame, you could see that there was a structure right there. But in this time frame, it is not a valid order block because it hasn't broken structure. So don't make the mistake of marking this order block, thinking when price comes back to it, it will react to it. And of course, price did react to it, but it is not an order block, or it is not a valid order block. What is the valid order block right here? It is this last, okay, candle right here. This last bearish candle right here. This last bearish candle right here. That broke structure. This last bearish, this little candle right here. It is the one that led the bullish momentum to break structure right there. And so when price came back to it, went a little deeper, but it still reacted from it, and then did what? Pushed price upwards. It did what? It pushed price upwards. Okay? It pushed price upwards. And then we come to this candle, this order block that I've marked right here. There is also what? A bullish order block. Okay. What did it do? There was displacement. Displacement to break structure. You see, there was displacement to break structure. So the moment price came back to 8, what did it do? Moved higher. The displacement is very, very important. I keep on mentioning displacement. You need an energetic move that breaks structure, not just these kind of moves. Okay? Not a move like this. Not this move to break structure. No. We need an energetic move. Energetic move that will break structure. Okay? And so when price came back to that other block, it did what? It went upwards. Another last example, then we'll be done. So we have these examples here too. All right. So as you can see, it is very, very clear that in this current structure, it was a downtrend. We were in a downtrend. Okay. And so we have a break of structure right here. And as you can see, you see, anytime that I've marked an order block, you could see that right from that order block, there was an energetic move downwards. As you can see, this order block, after this order block, there was an energetic move downwards to break structure right here. And same applies to this too. Energetic move downwards, like no other candle was there, like just a single um successive bearish candles, down to break structure right here. That is what shows you that this is a valid order block because price is willing to actually leave that place fast. And that is why there are orders that are left behind for price to come and do what? Fill, take them, and then what? Move downwards. Because the price moved too fast from it that it has to come back to it again. Take those orders that was left behind and then do what? Move downwards. That's why I keep on telling you there are other blocks everywhere, but the valid ones are the ones that break structure, are the ones that have displacement. Because when it comes to those kind of other blocks, you are almost 80% sure that it is going to wreck because of the displacement, just the displacement, because of the energetic move after it was created, because it broke structure. So bullish candle, the last bullish candle is right there before what? A break of structure. So when price came back to it, it did what? Moved price lower. So in case you want to join this trend, what do? You put your order here. You put your stop loss below that order block. Sorry, above that order block or above this high. Then what do you target? Any target that you want. 1:2 1:3, or whatever. But I'm not here to teach you how to enter the market. I'm here to teach you order blocks. And as you can see, this specific little candle right here is what did this magic right there. This little candle right there. Okay, this candle right here. That's what did all this magic. And when price came back to that other block that I've marked right here. So as you can see, that other block here is the last bullish candle before that strong move downwards. So when price came back to it, it did what? It pushed price lower. Okay, it pushed price lower. So with this one too, if you want to enter, you put your order here. You put your stop loss above that high right here, this high. Okay. And where do you target? You target the nearest low right there. There. And if you are greedy enough and you want targets here, you do too. Okay. And it's funny how price went to the thick of it and then boom, shy away. Okay. So this is the idea of order blocks. The last bearish or bullish candle before a bearish or bullish displacement that broke structure. That is an order block. Just have the idea of order blocks in your mind. We are going to talk about entry models. And when we get to the entry models, how you're going to enter the market, we will put everything together. So from the beginning of our lectures, right, from the foundation of forex, understanding the basics, from liquidity, from market structure to this order block, everything will come together in one. But now you have to learn it individually. Go onto your chart and then identify them and see how price reacted when it got there. Thank you.